Welcome. In this video, when will Xcn coin price skyrocket? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most prominent structures on the chart is undoubtedly the clearly visible ascending trend line. This trend line not only reveals the overall direction of the market, but also shows that price movements are forming in an orderly upward structure. From a technical analysis standpoint, the presence of such a steady upward trend is a clear indication that market participants generally hold positive expectations. Ascending trends suggest that buyers are continuously entering the market, while sellers are gradually weakening, and buying pressure is becoming dominant. In this context, the fact that the price is moving toward this ascending trend is a highly encouraging development. Currently, we can see that the price is gradually approaching this ascending trend line. Such scenarios are often accompanied by a brief market pause, a correction, or a pullback toward a support area to gather strength. However, the fact that this process is progressing in a healthy and controlled manner presents a positive outlook in the bigger picture. These types of trend lines have previously served as support multiple times and have consistently led to strong upward reactions whenever the price touched them. This implies that if the price tests this trend line again, there is a high probability it will experience another upward bounce, just as it did in the past. Ascending trend lines are often viewed by investors as psychological support lines. Especially when the trend has been tested several times and has consistently held, the reliability of the line increases. In technical analysis, the credibility of a trend line is directly related to how long it has existed and how many times it has been tested. The current ascending trend line has been tested multiple times in the past, with each interaction sparking strong buying interest and leading to new higher highs. Therefore, the price approaching this level again signals that a highly strategic buying opportunity may be near. Experienced traders who utilize technical analysis closely monitor these ascending trend zones. These areas are particularly attractive due to their favorable risk-reward ratio. As the price nears the trend line, stop-loss levels become more clearly defined, while upward potential targets reach more appealing levels. Hence, the current movement of the price toward this ascending trend line may also be interpreted as the market preparing for a new upward move. If the price touches this line and receives strong support, a new bullish momentum phase is likely to begin. Moreover, the price moving toward the ascending trend line creates not only a technically favorable setup, but also a psychologically positive environment. Investors tend to view these trend structures as safe zones. As the price approaches the trend line, it becomes a point of increased investor interest and a zone where position-taking appetite grows. This rise in liquidity can lead to stronger upward reactions in the price. Thus, the ascending trend zone functions not only as a support line, but also as a psychological threshold. The price is now moving toward this ascending trend line. If a positive reaction occurs here as it did in the past, this scenario can be interpreted in technical analysis as a classic trend support scenario. In such a case, it would be expected for the price to regain upward momentum and target previous high levels. But we cannot rely solely on trends for analysis. Let's also take a look at other metrics. Stay tuned. One of the key technical patterns currently visible on the chart is the formation of lower highs and lower lows, indicating that the price has been exhibiting a predominantly downward structure for some time. While this pattern suggests a correction or consolidation phase in the short term, it also carries signals that a potential reversal could be on the horizon. Every downtrend, after all, lays the groundwork for a possible future uptrend. Therefore, this structure should not be seen purely as a negative development, but rather as a phase that should be monitored closely, as it may hold emerging opportunities. At the moment, price action is moving within a downward channel, characterized by a classic sequence of declining peaks and troughs. However, these types of formations often reverse over time and can give way to more positive price action. From a technical analysis standpoint, the most important development needed for such a reversal is a shift from the current pattern of lower lows and lower highs to one of higher lows and higher highs. When this transition occurs, it signals that a bullish reversal is underway, an encouraging sign for investors. Currently, the price has shown occasional bounce backs driven by buying interest, which has resulted in minor upward movements. However, for these upward moves to be sustainable and evolve into a strong trend, the price must break above the previous high and then form a higher low during subsequent pullbacks. This kind of structure would indicate a shift in market psychology, with selling pressure weakening and buyers gradually gaining control. Thus, while this may appear as a phase of weakness in the short term, it is actually a critical stage in laying the foundation for long-term strength. The transition to a higher high and higher low structure is not only significant from a technical standpoint, but also reflects a major psychological shift among investors. In a downtrend, investors tend to be cautious, focusing more on risk aversion than opportunity. However, once the first higher low and higher high are observed, it often triggers the perception that a trend reversal has begun, leading to increased buying activity. This, in turn, boosts liquidity and allows the price to rise more steadily. Moreover, such transition phases within downtrends are often referred to as accumulation phases in technical analysis. During this time, large players such as whales or institutional investors accumulate positions at low price levels and prepare the groundwork for a price increase. As a result, the current pattern of lower highs and lower lows may be interpreted not as a mere pullback, but rather as a stage of accumulation and preparation, especially if the price begins to stabilize at a key support area, accompanied by an increase in volume and technical indicators producing positive signals from low levels. It could be a precursor to an upcoming bullish move. Many technical analysts prioritize these types of structural patterns to identify trend reversals. A key confirmation often comes when the price breaks above a previous high and then pulls back to form a higher low. This structure is widely accepted as a strong signal that an uptrend has begun. We may currently be at the beginning stage of such a scenario. If the price manages to form a higher high in the upcoming period and then follows it with a higher low. This technical structure will indicate a market environment where buying opportunities increase and investor confidence is being restored. The MACD indicator, one of the most frequently used and closely monitored tools in technical analysis, provides highly valuable insights into market momentum and potential trend reversals. Looking at the current chart structure, we can see that the MACD is positioned just below the zero line, placing it at a critical level that should be watched closely. This area typically indicates that prices are in a correction phase, but also that a recovery trend is gradually gaining strength. Although MACD values below the zero line indicate that the short-term moving average is below the long-term moving average and that momentum is in negative territory, this does not necessarily imply a prolonged downtrend. On the contrary, if the MACD begins to curl upward below the zero line and moves closer to the signal line, potentially setting up for a crossover, it can serve as a leading signal of a strong upward move. These types of crossovers often suggest trend reversals and mark a time when investors should consider reassessing their positions. At the moment, the MACD histogram also appears to be gradually shrinking, which, despite remaining in negative territory, reflects a weakening downward momentum. The reduction in histogram bars suggests that bearish pressure is diminishing and that a bottoming process in price may be nearing completion. This paves the way for the MACD lines to converge and potentially form an upward crossover. When such a crossover occurs, it often triggers an upward price reaction and is referred to in technical analysis as a bullish crossover. We should monitor MACD crossovers closely. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.